Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1649A, and today's date is August 27th, 2018, and the title of the episode is, As the U.S. Approaches a Death Cross, the Good Guys Prepare the Economic Transition. Let's get into the economic collapse financial news. Now, how do you know when you're hitting at the heart of the central bank? Well, the central bank of all central banks comes out of the darkness behind the curtain, and they come out and they say, listen, everything that Trump is doing is going to hurt the global economy. And we're already hearing from the BIS, that's the Bank of International Settlements, and you can see that they're very nervous about what is going on here because they realize that they're about to be taken down. And they can see what is happening around the world. And remember, they spent many, many years creating this system, building it, because they thought in their minds that this entire planet was going to be controlled by them, that we were going to have a one world government, a one currency system which they controlled. Everyone was going to be slaves and working for them. This was the major plan. And now everything is falling apart, and they're speaking out against what is happening. And that's how you know that they know that the clock is ticking down. But what we're seeing right now in the economy is a complete breakdown of the entire economic system. And yes, Trump needs to keep everyone aware of how great the economy is doing. This is part of the strategy they are using. They're using the same strategy the enemy has been using for all these years. Think about it. Go back in time. Every time the economy went into recession, what was the central bank always telling us? What was the mainstream media always telling us? How great the economy is. How fantastic it is. Look at the stock market. This is exactly what Trump is doing right now. And if you look at what happened with North Korea and many other things, you can see that he's continually using this strategy, using everything that they've done in the past to push this new agenda forward. So just because he's out there saying that the economy is doing great, look at these numbers, because this is what they always did. Look at our GDP numbers. Look at the stock market. Look how great everything is. He's using this against them. And they don't know what to do at this point. Because when everything starts to fall apart, he's going to say, look, I made the economy great. It was better than it's ever been before. The GDP numbers are double. Unemployment is the lowest we've ever seen. What has the central bank done? And this is what he's getting prepared for. Not just him, all the people that are supporting, everyone that is in motion, everyone that is doing all of this, they are prepared and ready. And this is not just the U.S. It's China, it's Russia, all working together. And what we're seeing right now is we're seeing the yield curve, and it's flattening, and it looks like we might even get to an inverted yield curve. And this is why some individuals in the Fed wanted to change the way we calculate the yield curve. Now, the yield curve right now is the flattest since August of 2007. Well, you know what happened in 2008, going into 2009. We were in a recession. Actually, we were in a recession way before that. But again, they look at the stock market and they tell you, later on when it actually started. So we are now seeing a flattening yield curve where short-term yields and long-term yields move closer together. Now, unless the 10-year yield gets on the rate hike bandwagon and jumps, it might soon be lower than the 2-year yield, a condition called a yield curve inversion. This happens as shorter-term yields rise following the Fed's rate hikes, but long-term yields refuse to budge, and then we get an inversion. So we're on an inversion watch right now, and once the spread between the 2-year and the 10-year move past zero, that's when we hit the inversion. Right now, we're at 0.19. And if we go back in time to like 2016, we were at 1.25. If we go back to 2013, we were at 2.5. So here we are already. We're on inversion watch, And if this drops below zero, we're in trouble. It's game over. And the yield curve flattens when the Fed started to raise rates. If we go back in time and we look at December 14th, 2016, all of a sudden we saw the U.S. Treasury yield curve start to flatten. So we see that it's coming. We know that the economy is in trouble. And we can see this from what is happening with the U.S. economic data, which is the death cross. Remember global synchronous recovery? Well, that's over. For the first time since early 2015, U.S. economic data is trending dramatically more disappointing than that of Europe. In fact, as the global synchronous recovery evaporates, U.S. and European economic data has not been so completely decoupled. And what we're seeing is the EU macro surprise index and the U.S. macro surprise index. It looks like we're headed towards a death cross. And every time we've seen this, guess what happens? We enter a recession. Here we are once again headed in that way. Now, the Bank of International Settlements, and not just the BIZ, but the IMF and the rest of the central bankers, they see what is happening here and they do not like it whatsoever. The general manager of the BIZ warned the greater risk is not how many points of GDP the rising tariffs will subtract from the U.S. and China, but the growing danger to globalization itself. And he went on to say, reversing globalization could increase prices, raise unemployment, and crimp growth. Higher tariffs could, actually just say would, drive up U.S. inflation and force the Fed to raise rates, driving up the dollar and hurting both U.S. exports and emerging market economies in the process. He said protectionism also threatens to unsettle financial markets and put a drag on firms' capital spending as investors take fright and financial conditions tighten. These real and financial risks could amplify each other, creating a perfect storm and exacting an even higher price. Basically, the central bank is out there saying, listen, what Trump is doing and what the Patriots are doing right now, they're going to unwind everything that we did, and globalization is going to fall by the wayside. And our system, the central banking system, remember, this is not a people system, this is their system that they created. And if you go back to 1913, that's when it all started. Their system is going to fail. They do not like this. This is why they're out there screaming and yelling, warning the world that it's all going to come crashing down. Well, sometimes things need to come crashing down so we can rebuild it the right way. Now, the good guys, Trump and the Patriots, they are trying to prepare everything for this transition. And what we need to do is we need to get out of all these trade deals that the central bank and the deep state set up. This was for globalization. That was the only reason they were doing this. They were taking different steps like NAFTA. The next big one was TPP, which is struck down. NAFTA now was renegotiated and it's renamed right now. And you can see it's the United States-Mexico Trade Agreement. Now, Trump couldn't get rid of it all together because it had to go through Congress, and it was going to take a very long time. And what they normally do with these trade agreements, they make it so intertwined, so you just can't come in and say, okay, we don't want this anymore. But the deal was announced today that U.S. and Mexico had reached a new deal that would govern their totally out-of-whack trade relationship. And Trump came out and said, you know, it's a big deal looking good with Mexico, and got rid of the name NAFTA. Now, remember, when they created NAFTA, they told us it was going to bring jobs to the U.S., it was going to be beneficial for the U.S., and the whole entire agreement was based around wages through the automobile manufacturers. And what they thought was going to happen was they were going to allow Mexico, and this is what their plan was, which was never going to happen, they were going to let the population rise up to the level of the United States. And once the population in wages rose up to the level of the United States, the automobile workers in Mexico would be getting paid a lot more. almost equal to the United States, which would allow the United States to keep all the jobs here. But what really happened? Well, that didn't happen at all. The wages were suppressed in Mexico. Think about this for a second. In Mexico, they were supposed to bring the jobs there, and somehow, some way, they were going to bring the way of life of the everyday people up to the level of the United States. I mean, does that sound realistic? Absolutely not. Remember, GM employs over 15,000 production workers in Mexico. They pay workers less than $3 per hour and exports over 80% of the vehicles to the U.S. to sell here. Now, think about what's happening here in the United States. The UAW GM workers here in the U.S. are laid off and unemployed. Now, if we look at the U.S. assembly line worker here in the U.S., they earn, on average, $29.62 per hour. And workers at component makers earn around $20.81 per hour. Rising wages in Mexico would squeeze profits from those automobile makers, and they're not going to let that happen. So Trump really wanted to get rid of NAFTA, get rid of what was going on there, and bring the jobs back here. And he couldn't do that because it was intertwined into Congress. Congress would have to vote on it, and it wasn't as easy as getting rid of TPP because that wasn't really established yet. And with an executive order, he was able to strike down TPP. But a key provision of the New Deal is an increase in the mandated locally sourced auto content from 62.5% to 75%, and that 40% to 45% of auto content would be made by workers earning average base wage of $16 per hour. Now, according to the U.S. Trade Rep, the new rules will incentivize billions annually in additional U.S. vehicle and auto parts production and help preserve and reshore industry jobs and investment. The deal also maintains duty-free access in farm products, while the countries have also agreed to stronger rules of origin for industrial products such as chemicals, steel-intensive products, glass, and optical fiber. The question remains, what happens now with Canada? And it looks like they're going to try to work with Canada right now. Remember, this deal was only with Mexico. NAFTA, well, that was with Canada and Mexico and the U.S. So Trump just made a bilateral agreement. Now, is this agreement all said and done? No, I think this is the beginning stages. Trump says, trade deal with Mexico is very special for manufacturers and farmers. Trump pitches U.S.-Mexico trade deal, incredible for workers. Trump says we could do a separate deal with Canada or make them part of the deal with Mexico. Trump eventually will be able to work out a deal with China. So we can see right now they're trying to put us in the right position for this transition. And I think as we move forward and everything is collapsed and then rebuilt, I think this trade agreement is going to go through many, many, many revisions. And we can see already with many other countries, bilateral trade agreements are being worked on right now. China is making a lot of bilateral trade agreements, and these bilateral trade agreements are outside of the globalist system. Yes, in some cases, they're still controlled by the World Trade Organization, but we can see already Trump already has his eye on that and most likely going to get rid of that because that is part of the globalist system. And remember, this first stage of reworking NAFTA doesn't solve all our problems. It's impossible to solve every single problem that these deep state central bankers have done over the many, many years within the first 2 years. It's completely impossible. And if he was an unelected leader like those in the ECB, where they can push their policies on different countries and the countries really can't argue with them, he'd be able to take his pen, write executive orders, get rid of Obamacare, get rid of NAFTA, get rid of many of the laws, but it doesn't work like that way here in the United States. You still have to go through Congress. You still have to go through other bodies of government to get things done. And we can see right now, sometimes you have to take baby steps to get into the position that you want and then move forward. But what we're seeing right now is this is in preparation for this economic transition. Remember, we can't bring all manufacturing back in a snap of a finger. It's going to take time. It took many, many years for the central bank and the deep state to move them offshore. To bring them all back and to build the infrastructure, to get the people trained is something quite different. And it's going to take much longer to do that than to move it offshore. So we can see that this is the beginning stages, and what they're doing is they're trying to set everything up for this economic transition because we are going to be going through it. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.